Welcome to the February 18th, 2019 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman and president, McGowan Group. Thank you for joining us for a fast-paced tour of the global financial markets. And today we take a longer-term view. I'm going to ask a question. Over the past 20 years, how much do you think the average investor has averaged per year? Over 20 years. This was shocking. The average, just 2.6% according to DOW over 20 years. And yet, let's look at this. Stocks have averaged about 7. Bonds have averaged 5. And those make up the two most popular choices. What gives? Well, my conclusion is that investors get sidetracked and then they panic and they sell stuff instead of buying stuff when it's cheap. And then they don't buy bargains when they should. The bond strategy is the other gap that investors have. You got to have the right bond strategy, and that includes what type of bonds. Let's go a little deeper into these returns. By the way, inflation's been 2%, with bonds at 5%. Your home is about 3.5% over 20 years. They're not subtracting what you pay those contractors and interest and all that. But anyway, average investor just 2.5%. And real estate investment trusts over the 20-year period, a surprising 9%. Alex Tolene, our head of trading, pointed out that a big part of that is you get a lot of cash flow and you add in inflation. The compounding effect gives us about a 9%. Here we go. Now we're going to take a 15-year view. This from JP Morgan Asset Management. Thank you very much. Real estate investment trust, consistent with that, about 8.5. What's the bottom? Commodity. People keep saying you got to have a commodity strategy. Well, how'd that work for you? Bottom at minus 2.5 for 15 years. Ouch. Remember the end of America said buy gold and commodities and stuff. It didn't work. And we got emerging market equities at 8%, big U.S. stocks just below 8%, small cap 7.5%, high yield corporate bonds 7.3%, vastly outperforming the corporate bond and the treasury bond category. Treasury bonds down at about a 2% over this time period. All of fixed income about 4%, and a blended portfolio again about 6%. Now you know what people have actually made in the portfolios, and we've got an idea of what mistakes people make. All right. Fixed income will go a little more granular. 15 years, high yields, 11%. That's competitive with equity. By the way, over this same 15 years, the S&P 500 is about a 15% return. Emerging market debt, 8%. Corporate, 6%. Asset allocation, 5%. Notice it's a little lower because, well, you have the bond portfolio not giving as much during this period. This is just 10 years. Municipals 5, treasuries 2. Let's take a look a little more granular at how big this $22 trillion headline is. U.S. government's $22 trillion in debt. Oh my God, run in circles, scream and shout. That's one of the big bad headlines. What is that relative to the amount of money Americans actually have? Total assets, $125 trillion. Liabilities, about $16 trillion. That means $109 trillion net worth. And you see it right here, $107 trillion right here, crossing $109 trillion probably in the next report. Homes make up over about $25 trillion. Pension funds, about $22 trillion or 21%. Financial assets, over $40 trillion. Well, that $22 trillion in debt, that's about $60 trillion in liquid financial assets. A big part of that would go into treasuries at a higher yield. That means that we are not overextended relative to the net worth. One more lesson in this chart. Look at this. 2007, at the peak, before the crisis. There's the crisis right there. $70 trillion net worth, just below $70 trillion. What's the average household net worth now? About $107 trillion, according to this chart, crossing $109 trillion probably here in the first half of the year. That's more than a 50% increase in the net worth of American households. And yeah, the $22 trillion in debt is too much. I get that. But the point is, it's not a crisis relative to the overall net worth after subtracting debt. And let's take a look. Federal Treasury is going to spend $4.4 trillion this year. That's probably too much. It's probably too much by $900 billion that they're going to borrow. They're going to spend money on, and this is interesting, non-defense discretionary, $670 billion. And then Social Security costs about $1 trillion. Medicare costs $1.2 trillion. Most of that is income taxes. We get $1.8 trillion income taxes. Corporate tax revenue, about $245 billion because they cut the corporate taxes. And then Social Security, that FICA you pay on your paycheck, well, that's about $1.2 trillion. Other is about $280 billion. We're not quite sure how the government gets that. That's probably tariffs. But anyway, that's the state of federal spending, and the budget obviously is about $900 billion more than it should be. I'm Spencer McGowan, your financial weatherman. Now you know more about the long-term returns, the financial markets, government finances, and household net worth. Be sure to subscribe at YouTube, because when there's a breaking crisis, McGowan Group YouTube is going to give you the update. You'll get an alert and a video that gives you guidance on great investment strategy. Better yet, go to NetWorthRadio.com, fill out your preliminary client questionnaire today, come down for your brainstorming session to make 2019 a more successful year for you and your family. Thank you for joining us. My firm, McGowan Group Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.